Hi everybody, I wanted to continue with our case study here on this company, Fresh Bouquets of Flowers, and basically explain ultimately cash reconciliation. This is what I wanted to go over, and I'm gonna give this file to you guys. It's gonna be available, but basically with the same example what we had last time, but basically what we have here is a company that had about 10 transactions. And they had owner invested in the business and bought some inventory. They bought equipment, had sales of 6,000, bought inventory for 4,000, had sales of 5,000, then provided some consulting for wedding planning for 12,000, recorded some depreciation, had wage expense of 2,000. Then the owner withdrew 4,000, and they had a liability. So if you trace this out, basically all these transactions I put into a T account in here. And this is really interesting. You could see like every transaction throws off a certain T account. Investment of 20,000 will give us a debit to cash for 20,000, credit to equity 20,000. Buying inventory for 5,000 gives us a credit to cash and a debit to inventory for 5,000. So everything is a journal entry here, and we're just going through and classifying everything. And then this is just, I linked this to the financial statement. So at the end of that, every T account is basically linked in the spreadsheet, and we have a balance sheet that balances. Notice that total assets equal an amount. Owner's equity is equal to basically your assets minus liabilities, or basically the balance of the T account. Sorry, the balance of the T account, which is for equity, we can see that it was just an investment of 20, then a reduction of 4, and the net balance is 16. And then what we have here is the 16, or the total amount, plus the income that actually goes into equity as well. And equities and liabilities together equal the assets. So we know basically that essentially everything balanced out that we recorded. Okay? So now with that said, I wanted to go over the cash reconciliation piece. So say cash per our T account is 18,000, and T account is basically, this is the same as our accounting system. And this is kind of like what is our bank versus our accounting system. So our T account will say 18,000, which is basically the accounting system. But for example, these two transactions, the 2,000 that paid but not cashed, I think it was for wage expense. Yeah, check mailed on Feb 26th. We recorded basically an expense on Feb 26th, but has the cash moved? No, because the employee hasn't cashed the check. So this is basically waiting on employee to clear. But right now the bank will say what? The bank will say 20,000. So that's basically you reconcile. You log into, say, your Chase Bank, and it will say balance per your bank. And then you'll say, oh, well, we have a discrepancy. Why? It's because of this. And that's basically the bottom line of the cash rec, because eventually you're going to want this to be the same, or things will get off track. When will this equalize? It will equalize as soon as employee cashes the check. Now, they may never cash it, say they lost it, so it will be different. It will continue to be different, and then, but that's like a control. Then you know something is off. You gotta basically, stop payment on that check, reissue the check again to them, and that's basically what the cash rec is all about. You could have another one, and then when there's multiple ones, you could really get confusing. So just with that, cash per bank would have been 20,000. But then we had this transaction, I think, also on the 28th, of receiving 12,000. We received 12,000. We got to check it still hasn't cleared. Or maybe we recorded it that, hey, they agreed to pair invoice, the check is in the mail, but we haven't received it yet, the 12,000. So, or we got the check, but now the bank is, we haven't received it yet. So we recorded the transaction because we put it in the bank, but cash is pending. So this will take 5 business days to clear. I mean, what if it doesn't clear? What if it's like non-sufficient funds? Oh, but that's a control. You need to follow up, keep following up with the bank until it does clear. So right now, the balance for the bank statement is actually 8,000, and the balance for the um, accounting system is 18,000. So we have a difference of 10,000, and basically it's 12 going kind of down on us, and 2 actually going up on us, with a net of 10,000. And that's how you know now every difference, what it is related to, and how to reconcile it. And this is basically the essence of how to do a cash rec.